With Nigeria's ambitious 54.99 trillion naira budget set in sights on economic restoration, revenue growth and fiscal discipline, can this plan truly deliver the 4.6% GDP growth target, or with structural constraints keep holding the economy back? Good morning and welcome to another power-packed episode of Business Week. Nigeria could spend a staggering $110 billion in food imports by 2025 unless digital agriculture takes off, while businesses in Lagos are losing 5.3 trillion naira annually to power shortages. Now, meanwhile, Cote d'Ivoire's smaller cocoa crop is straining global supply and adding pressure to commodity markets, while on the Wall Street, Tesla shares have been in free fall, fueling speculation about political risk for tech giants. And in today's deep dive, we break down Nigeria's latest budget with a focus on fiscal discipline, revenue mobilization, and 4.6% GDP growth projections for 2025. But can this budget truly drive transformation? Or will economic headwinds hold Nigeria back? Miss the biggest business stories of the week? Never mind, we're here to help you catch up as always. I'm Abby Owolawi. Let's take a look at how the markets performed this week. Beginning with commodities, as at Friday, the 14th of March, oil prices were stable on Friday after a more than 1% loss in the previous session as investors wait for the diminishing prospects of a quick end to the Ukraine war that could bring back more Russian energy supplies to Western markets. Brent crude was up by 0.66% to $70.34 a barrel after settling 1.5% lower in the previous session, while US WTI crude was at $67.02 a barrel, up by 0.71% after closing down 1.7% on Thursday. We now move to the Nigeria Stock Exchange, where, as at the end of last weekday of trading, a total of 341.70 million shares in 11,223 deals, corresponding to a market value of 16.65 billion naira, were traded. Comparatively against the previous NGX trading day, yesterday's data showed a 120% improvement in volume, 34% decline in turnover, and 6% decline in deals. The current market capitalization of the Nigerian Stock Exchange is 66.51 trillion naira. Let's now take a look at the latest performance across African markets. Starting in South Africa, the Johannesburg Stock Exchange closed at 87,916.44, marking a slight increase of 0.97%. In Ghana, the stock exchange saw a positive movement, with the index rising by 1.08% and closing at 6,110.81. In Kenya, the Nairobi Stock Exchange closed downward by 0.46%, with the index ending at 129.54. Now, finally, Morocco's Mazi Index showed strong performance, closing at 16,613.70, up by 0.75%. To European markets now, where data was higher on Friday after German lawmakers reportedly came closer to agreeing on reforming the country's debt brake rule. The regional stock 600 gained 1.19%, with the German DAX index up by 1.87%. France's CAC 40 index remained 1.16% higher, while the UK's FTSE 100 was up by 1.05%, and Spain's IBEX 335 index, by 1.32%. Finally, let's take a look at Wall Street as at Friday, March 14th, 2025, where stocks rallied on Friday but remained on track for steep weekly losses as volatility continues to permeate through Wall Street. The Dow Jones Industrial Average traded 1.48% higher, while the S&P 500 climbed by 1.91% and the Nasdaq Composite advanced by 2.38%. Let's now take you to our top stories for the week. Never before has Tesla's stock experienced such a steep decline, as we have Elon Musk's automaker stock being down 7 weeks in a row since his first visit to Washington to join the Trump administration. Now, in its 15 years as a publicly traded corporation, this is the longest losing run for Tesla. Tesla's market capitalization has dropped by well over $800 billion since the stock's December 17 peak of about $480. Now, according to the new CEO of Singapore's DBS Group, businesses that have committed to supporting ESG and DEI projects should honor their pledges and not let political events change them. Now, during a corporate leadership discussion at Converge Live, Tan Su Shan, the deputy CEO of DBS, stated, and I quote, "If your company is committed to lowering its carbon footprint and is financially viable, then stick to your commitment," end of quote. U.S. inflation slowed last month for the first time since September, and a measure of underlying inflation fell 4 years low, even as widespread tariffs threatened to send prices rocketing. The consumer price index rose by 2.8% in February from a year ago. Wednesday's report from the Labour Department showed down from 3% in the previous month, while core prices, which exclude the volatile food and energy categories, rose by 3.1% from a year earlier, down from 3.3% in January. Now, the core figure is the lowest since April 2021. The United States implemented 25% tariffs on steel and aluminum imports on Wednesday with no exemptions, despite global opposition. Now, the levies pushed by President Donald Trump were expected to raise costs across industries, including auto manufacturing and construction. The European Commission condemned the move and announced retaliatory tariffs from April 1st, marking the $28 billion impact of U.S. duties.
The Ontario Premier calling you and giving you his decision about the electricity surcharge, and you said you were pleased about that. Will you make a different decision now about the tariffs on Canada? Will you reduce it?
That, but probably so, yeah.
You're looking
he was a gentleman.
The European Union will impose retaliatory tariffs on $28 billion worth of U.S. goods starting April 1st, following the expiration of prior exemptions on U.S. steel and aluminum tariffs. Now, the European Commission announced that the countermeasures targeting products such as textiles, appliances, poultry and industrial goods aim to match the impact of the latest U.S. trade restrictions. European Commission President Ursula von der Leyen stated that the tariffs will be implemented in 2 phases with full enforcement in April. Let's take a look.
Morning. The United States is applying a 25% tariff on imports of steel and aluminum. We deeply regret this measure. Tariffs are taxes. They are bad for business and worse for consumers. They are disrupting supply chains. They bring uncertainty for the economy. Jobs are at stake, prices up. Nobody needs that on both sides, neither in the European Union nor in the United States. Our countermeasures will be introduced in 2 steps, starting with April 1st and fully in place as of April 13th. In the meantime, we will always remain open to negotiations. We firmly believe that in a world fraught with geo-economic and political uncertainties, it is not in our common interest to burden our economies with such tariffs.
U.S. President Donald Trump has threatened to impose a 200% tariff on all alcohol imports from the European Union as part of an ongoing trade dispute. Now, this threat comes in response to the EU's proposal to introduce a 50% tax on a U.S.-made whiskey, which is part of a retaliation against Trump's tariffs on steel and aluminum imports. Trump condemned the EU's actions and demanded the immediate removal of the tariff on U.S. whiskey, which marks yet another escalation in a trade war that has already unsettled global financial markets and raised concerns about its potential economic impacts on countries, including the U.S. and consumers worldwide.
April 2nd.
No.
You are not going to change your
No,
mind?
not. Look, we've been ripped off for years, and we're not going to be ripped off anymore. No, I'm not going to bend at all. Aluminum or steel or cars. We're not going to bend. We've been ripped off as a country for many, many years. We've been subjected to costs that we shouldn't be subjected to.
Germany has declared that urgent action is needed to boost the country's under-resourced military and alien economy as it defends plans for spending bonanza during a fiery parliamentary debate. The Conservatives and centre-left Social Democrats, in talks to form a coalition after February's general election, unveiled plans for vast extra outlays last week and are now racing to push them through the current legislation.
We must now do something to significantly increase our defense capability, and do so quickly and with great unity in terms of foreign and security policy. Let me be a little more precise. The word deterrence must now be backed up quickly and credibly by military means. Any further delay would be irresponsible.
Perhaps it's also about not carelessly squandering a historic opportunity at this moment. Dear colleagues, when history comes knocking, you have to open the door because you never know if there might be a second chance.
We must now look to the future. We must fulfill this responsibility, and we are potentially facing a profound historical decision for our country.
Now, following adverse weather, top cocoa grower Côte d'Ivoire is approaching meat crop predicted to be the lower this year, potentially limiting a comeback from a massive global shortfall. Now, according to a Bloomberg study of 6 traders and analysts nationwide, the second and lesser harvest of the season, which is expected to begin in April, should amount to roughly 400,000 tons. South Africa is looking to raise the country's value-added tax to a total of 16% by April 2026, and that is according to the new multi-year national budget, which was presented by the parliament earlier today by the finance minister. Now, the budget presentation was suspended 3 weeks ago owing to disagreements within the unity government of President Cyril Ramaphosa. Several GNU partners have rejected the budget, signaling stormy waters ahead. Now, still in South Africa, on Wednesday, the government unveiled a 3-year plan to invest over 1 trillion rand, or around $54.5 billion, on public infrastructure in a bid to spur economic expansion. In Cape Town, South African Minister of Finance Enoch Godongwa made the news during his yearly budget speech and presentation of the 2025 budget review to Parliament, stating that the infrastructure budget will be allocated to 3 primary areas: transportation and logistics, energy infrastructure, and water and sanitation. Nigeria may have to spend $110 billion in food imports in 2025 if it doesn't embrace and improve digital agricultural extension services, according to a warning by the Sasakawa Africa Association. Now, this was announced on Tuesday in Abuja at the annual stakeholder workshop. Emphasis was laid on ongoing food import expenditure and consulting services being key to agricultural change. Still, Nigeria residents and companies in Lagos continue to bear a heavy financial burden due to the state's electricity shortage. According to a recently published report, the energy deficit raises their expenses by an additional 5.3 trillion naira yearly. According to the Lagos State Government's Lagos Economic Development Update 2025, the state needs over 9,000 megawatts of power, but only 1,000 megawatts comes from the national grid. Because of this, over 80% of Lagos businesses and residents depend on off-grid power sources, primarily fuel oil and generators. Well, that's it for our top stories.